welcome to The Breakdown, your weekly Arizona real estate trends and lending insights. I'm Susan Bermudez, the real estate gal with eXp Realty.
Yeah, I'm Joshua Young here with JCM Lending.
And it's another week and
Happy
hump
hump
day!
day!
So we're actually together and not via Zoom, so it's great to see you.
That's a win.
Yeah, great to see you in person. So let's just dive into some real estate trends as we head into the holidays here. So lots of great things that are going on. I wanted to start out by saying that 9 out of the 17 cities are still sitting in the seller's market, which is fantastic. These are the cities that we track here, the major ones in Maricopa County. Now, Paradise Valley has gotten weaker. It's the only one still in a seller's market, but it has gotten weaker. So what is a seller's market? Remember, that is when demand is high and supply is low. It's going to create that seller's market for you. So demand is clearly picking up, but not as energetically as we might expect after almost 100 basis points have been looped off of the 30-year fixed mortgage rates. We hear that purchase application for mortgages have jumped almost 35%, but this is from an extreme low level, but still 35%.
Yeah, it's a great trend, and it really comes down to the nice drop we've seen in interest rates, Susie. I mean, honestly, we've even seen an increase in refinance rates lately, if you can imagine that. So,
awesome.
Or refinance activity, I should say. So it's a positive movement for sure.
Yeah, well, a few cities have also seen their market index move higher in the last week, and that is Surprise, Buckeye, Avondale, Queen Creek, Mesa, and Scottsdale. So the good thing is that Chandler and Glendale have shown the most improvement in sales for the week, for Chandler being the top of the leaderboard. So we're Chandler and Gilbert ourselves, so this is kind of nice to see out there. So also good news for builders out there. If you're looking for one of those new builds, right, this is the time to do it. I touched on this last week. So sales are still kind of low for November and December for them, but I'm telling you, the incentives are crazy right now out there, and they're trying to get things locked up by the end of the year. So go and check out some new builds. Also, great thing is that the serious delinquencies on the home loans fell to almost a 17-year low, according to financial services, although national foreclosures jumped to the highest level in 18 months. But guys, we got to remember that we're still 25% below the pre-pandemic levels.
Yeah,
crazy.
Great numbers.
Right?
Yeah. Yeah,
so prices will continue and still continue to hold its values, which is great for sellers, a little bit bad for buyers, but yeah.
Yeah, well, so for this week's Lending Insight, I just want to quickly share two things that are impacting the mortgage interest rates this week. First up, on Friday of last week, we got the Bureau of Labor Statistics job data for November, and it narrowly beat out the expectations of the market, which basically just means more jobs were created than we expected, and that's good for the economy. Maybe not so great for mortgage rates, honestly. But secondly, just yesterday, we got the Consumer Price Index that measures growing prices on all the things that we buy. And for November, we saw a really slight increase in prices across the board, though there were some notable good areas. For example, gasoline prices did decrease 6% month over month.
My wallet appreciated that.
My premium fuel as well. But overall, inflation continues to show mostly stable or declining costs, and lower inflation generally brings lower interest rates. So it'll take some time, but this is a good news story for the future.
Yeah, so we appreciate you guys watching our content and look forward to bringing you more information on a weekly basis.
Yeah, so please like and subscribe. We look forward to seeing you guys again next week.
See you guys.
Later.